Hey ho, welcome back. August 21st, another recap. Don't spend any money you can't afford to lose. Keep your money. Today, we're down $33 on about 6 trades, and we were all over the place. So, starting at pre-market, there were a couple of stocks, PTIX and APM, that have moved up, and maybe some folks made some money. But we put out a couple of starters, just 10 shares on both PTIX and APM, and watched them, and they didn't really materialize much. And of course, everybody at this point, 5:33, was waiting on their jobs report, and it showed a downward trend, which isn't good for the economy. And I think that might have had an impact. I looked at the SPY and the VIX and Nvidia, and what I see is that I don't see us recovering into another push up for a bull market up until probably the 13th, which will be after the holidays. And we're still waiting. There might be a push up when Nvidia releases earnings. I don't know what day that is, but that might just be tech stocks. The economy is showing signs of breaking the seams or breaking seams, and I think that has something to do with it. I don't think the uh, the Fed meeting at Jackson Hole is going to bring anything else other than realization to the market that we may not have any cut rates, one or maybe none, based on the inflation and the jobs data, which they seem to think that jobs data is a lot more important. So, in trying to protect the job market, that makes sense. And history can repeat itself. In the 1900s, the Roaring Twenties, uh, right after the Spanish flu, people were celebrating like mad, and everybody was having parties, and it was a good old time. People were spending crazily. Tariffs were put into place back then, and the rates were lowered substantially. What wound up happening was that everybody was spending so much that they had to begin to borrow, and everybody borrowing, and the effect of tariffs and probably the recovery of the Spanish flu eventually led to the Great Depression. Now we're in modern times. Hopefully, we won't see that again, but we've seen since the 70s, we've seen inflation hit, we've seen the 2008 financial collapse, and it might affect us. And certainly, we've seen prices go up. I mean, the reports, the media, and the government are happy about a 2% inflation every month. But if your prices are rising 2% every month, at the end of a year, that's 24%, which means everything you buy is going to cost you that much more. So uh, we're going to have to watch things between here and the end of the year. Now, the market really doesn't care, I don't think, about what the consumer has to pay for cereal or milk. The market cares about how it's going to go up or down. So we're still in pre-market. ASBP showed signs of life. Of course, this is a continuation. I normally would have not traded a continuation, but I did on THAR and ASBP, and certainly because there was nothing else, and made a few bucks, but nothing earth-shattering. So I checked. We're still up $147 on the month, and I had an opportunity to bring up this screen. And I mentioned in one of the other videos that I keep 3 configured screens for charts and trading. And I don't use this one much. What I wanted to do was show it to you guys because over time, as I was looking for ways to focus on trading and to be a better trading, I would look at indicators and I would find them to see if they fit my style. And so I would set up these screens. This one I liked because it was pretty clean. and you see the indicators in there. And one of the nice things I like was the dots, the green, yellow, and red dots were pretty clear, easy to see. The only problem with these types of indicators is that these visual indicators are showing you what has happened, not what is going to happen. And what happens is that some traders will tie themselves to these indicators expecting a result out of these indicators, which may or may not happen. And so one of the things that you need to do is take these indicators with a grain of salt. You need to still do your due diligence, check your support lines, check your resistance lines, check your dailies, and more importantly, keep your watch list nearby. Take a look at what the market is doing. Be aware of what month you're in and what history says about that month in the market. We know August is a slow month. Watch what other stocks are moving in your gap ups, because you could be sitting on a chart like this, and if you can't measure the volume, and if the volume is not coming in, you can sit here all day long, and the price will not go anywhere. The chart looks nice, the overall screen looks nice, but it's not going to get you anywhere. If you got one or two other stocks moving, that presents a problem, because it means that this nice little green slope up here, it's going to eventually slow down and fall. And I think that's what we saw today. So try PTIX, lost $5. Tried APM, lost about $4. ASBP made $10. Then we went into THAR, and this was a continuation. I normally wouldn't have taken it, but it looked like it wanted to move over 510. So and it eventually did. But I think I took it way too high, 518. I think a couple of stocks I took too high. And I think this was the problem with this one was forcing the market, trying to force something out that wasn't there. So I think we're going to be slow. I still have 1,500 cash to trade with, so I'll take a look at a power hour and see if there's anything, see if the market waits up. But I think that next week we might see a little bit ramp up, as folks have already taken their kids to college and school, and they're settling in their lives, and they might return back. And this Fed meeting, week-long Fed meeting will be over, and we'll have indications one way or another, or maybe no other way, other than uncertainty, and we have to wait until September's Fed meeting, and I think that'll be around the 17th. So I'm predicting that around the 13th, things may start to pick up, and hopefully the 17th brings us good news. So here I swap back to what I'm currently using now, and that's what happens. So set up a screen, save it, give it a name, and then use it for a little while and see how comfortable you feel. And they're training wheels. Visual charts are training wheels. And maybe if I trade tomorrow, maybe I'll show the other one. And I think I've shown it before. But yeah, today was nothing big. Looks like everything was consolidating. I did check my my reports for the last 30 days, and my accuracy has gone up for the last 30 days to 63%. And the interesting thing is that I'm up. My winners are at $35.60, where my losers are at $35.04. So that's one of the reasons why we're above in August. And August is a bad month. So if you can remain green in August through all of this slowdown, and everything else, then I think that once we pick up and we get more of a bullish market, then you can have better expectations of moves up. Certainly, this has been very slow compared to other months during earlier in the year. And I'll tell you, even earlier in the year when stocks were a little bit more bullish, I was losing more money than now. So that means there's an improvement, and that means that we're moving ahead. And that's the whole point. If use small shares, just be very picky about the positions you take, where you take them, learn the ins and outs, make sure you've got all your technicals, make sure that you can focus in on everything that you need to take a look at, everything that lets you make good choices, draw your trend lines. Like I say, you don't have to trade anything, just draw trend lines and see what happens, because that'll make you a better trader, and it'll help you understand price movement. Once you understand the price movement, and I had heard this before, more than a year ago. I heard you have to learn price movement. You have to learn what is it. What is it? Is it just the fact that price moving up and down? It isn't that. It is a understanding of how a stock price is going to go up and down based on all of the factors: your indicators, your market stance, your watch list, how many stocks are moving, what is the sentiment, what is the volume of trades in the market. So all those are important, and that's what once you understand that, then the tools, the indicators, and everything else becomes secondary. They become support, and they help you to confirm the trades that you want to take. The problem is you, me, the emotion. We want to make money. That's the whole objective, and but we can't set levers to go up and down, to make stock prices go up and down. So it's our emotions that are going to get the best of us, no matter what, and that's okay. But if you can control our emotions for more than 50% of the time, you can then make trades, and you can make good trades. So if you like the videos, like and subscribe, leave your comments, questions below. If you have hate, leave it down below. It all helps the channel out, so we can continue to make more videos. Yeah, I'll have to fix the clock. I don't know how it shifts there when I move, when I switch charts around. Anyway, so we're down $33 on the day. We've had 3 red days. They're pretty small, 60, 10, and 33. So $100, but we're still $14 up on the week. We made 114 on Monday, so we're still $14 on the week. So we're green for all 3 weeks. We're green on the month, $147. And I don't know if I will trade tomorrow. I might get up and just observe. If there's an opportunity, I will. But I think at this point, I've learned my lesson. It's hands off. It's just not happening. And then the same thing will be next week. Just watch and see if something comes up, then take it. But if not, don't bother. There's no point. And I think that's going to be my attitude for the next couple of weeks until we hit the 13th through the week of the 17th. All right, so if I don't trade tomorrow, they'll have an update, and you all have a very nice weekend. Have a nice rest of your day, and may your trading be profitable.